Alrighty. Welcome, folks. Here, Marziti here, back with more with the New Trader series. Tonight, we're talking about lines, support and resistance lines, horizontal lines, trend lines, and we'll get into fan lines as well. Time permitting, we may get into other material. We'll talk a little bit about liquidity as well. But let's just kind of go into this here a little bit. First of all, the normal disclaimers. I am not a financial advisor. This video is for educational purposes only. I'm not a moderator or have any kind of financial interest with the bullish bears. I'm just a user like you guys. So, with that in mind, let's start talking about classic support and resistance. This is the original topic of support and resistance was originally all based on horizontal lines. For example, right here, and let me blow this up a little bit more. And what we can kind of see is this line right here. As you can see, price came up to it, rejected, came up to it, rejected, broke through it. And many times when you see this breakthrough, it's a good sized candle because they are intent on pushing through that line. So you can see, little itty bitty candles. Here we got a nice candle, but still the point being is here we are breaking through that. And now we're above that trend line, and now we can see it becomes where before it was resistance, now it becomes support. Support. Got close to it, did take liquidity. And I mentioned that we're going to talk about liquidity here. So what is liquidity? All right. All these people that went long here. Let me get my little scribey tool up here. All these people right around in here that went long. Okay. Their stops are based on this old resistance line. So they're long here, so their stops are just below this resistance line. Now that this has become support, their stops are down in here because they're long, right? So when you see a candle like this one right here, reaching down below that line, it is trying to trigger all these people's stops. Now, sometimes it can reach much deeper. It's just a matter of, if we look at the book, if we were looking at the order flow at the time, like on Bookmap or Jigsaw or your level 2 kind of material, you'd probably see that right in here. Now let's think about, what are those stop orders? If these people are going long, then they bought. So these would be sell orders, right? This is the sell order that gets them out of the trade. So since this is the sell order that gets them out of the trade, then we trigger a bunch of sell orders. Well, what do you got to do in order to trigger a sell order? Well, you got to buy. So what we're doing is we're taking their sell orders, we're buying up their sell orders so that we now have the contracts needed to go up. So this right here is called a liquidity run, right there. That right there is called a liquidity run. And or stop loss run, I should say. They're running the stops. So they run the stops to get their contracts so that they can go long. So we're taking out the people who were long so that somebody else can go long using their stops. And that's called a stop run. Let's blow that up so you guys can really see that on the screen. Right here, we touched it to the tick. Little bit of a stop run here, possibly. Got a move out of it. Came back, reaching deeper this time for more stops to make, oops, that's not what I wanted, the bigger run yet. Okay? So right there, we've covered two things, and that is support, traditional support and resistance with a horizontal line, and stop runs. Stop runs are a form of liquidity. Now there's other types of liquidity, and we'll talk about those later on, but that is the first part. So let's just see if anybody's got any questions in voice or in chat. I'll pause there for a second while I clear this screen off. Okay. Now, with the advent of computers trading the markets, we also have, oh, right, look at there. Right there, came right back down. We made all this move over here, and then when we came back down, where did we come down to? Right there. Let me get my, right there. Look at that. So there's an old support line that still works. Now, I'm on the, what am I on? I'm on a daily chart here, okay? Remember that trading is fractal. Fractal, what does that mean? Fractal means that the same patterns, the same concepts happen on just about all the different time frames. Here I'm on a daily chart, and we see that support, and we're talking about support and resistance on a daily. But we can also see this exact same concept on the hourly, the 30-minute, the 15-minute, the 5-minute, the 1-minute. The same concepts apply to all time zones, and we call that fractal. All right? Okay. Now, at this point, here we see a resistance line right up in here, sort of, kind of right here. Now, we see a resistance line here. Price was below it. Tags it once, twice. Comes close, third time. Now, the thing to understand about horizontal, well, any kind of resistance line, whether we're talking about horizontal verticals, or not verticals, of course, horizontals or diagonals, the more times it tags it, the stronger it is. But eventually, when that break occurs, notice the violence, the move, the power of the move to break it. So we tag it. Well, here's actually where we kind of set it. We tag it, we reject it, lower high, lower low, and then, bam, we bust through it with a vengeance, kind of thing. And so we see really that there's two concepts here. The more times we tag it, the more attention it gets. It gets more attention, and follow this line over here, and you'll see that it's still in play right there. All right? And so what is this crazy candle right here? This was a, whatever, this was a daily candle. I have no idea. But at any rate, this is on Ethereum. So, okay, that makes perfect sense on Ethereum. It's got some wild moves. Nonetheless, you can see that even though that trend line was set way over there, not trend line, resistance, support and resistance line, even days, months later, it still matters. And so does this other one. It still matters. So again, trading is fractal. So if you see this on a 5-minute chart, it still matters. If you see it on a 15-minute, 30-minute chart, it can still matter. And that's the important thing to understand, is that these things, people see them, the algos see them, all different kinds of things see them, know that they're there. If we follow this out some more, look here, there's another bust through it line. Where did we go? Back up to that other line. Look right here, channel play, boom, boom, ping-ponging. And now, of course, we're way out of it. All right? So anyway, classic support and resistance. Now, some people will say, well, do you mark the open and the close kind of thing, or do you mark the wicks? And the answer is, look at the chart and see which one makes the most sense. Let's go back over here where I marked this in the first place. Where was this? Yeah. Here I'm marking the wick. Here I marked the body because, let's just zoom in. You can see I marked the close of this candle right here, but at the same time I'm marking the wick here because it makes sense. It makes sense. And with very few exceptions, most things are not to the tick. The only things that we say are really to the tick are prior day high and low. That's the only thing that's really to the tick. Everything else, for the most part, is an area, a range. Okay? Now, so again, even though that was months and months ago, here, 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 violent breakthrough again. We continue to see these violent breakthroughs when they're ready to move and cross one of these support and resistance lines. Very common. You will see a very violent move doing it because they're trying to change the momentum. Because here we were trading in a channel, ping pong, you know. Now we're saying we're done playing ping pong. It's time to move on. Violent move. Very, very common. Okay. Just see. And then here we are. Months and months later. Back to it again. Back to it again. See that? So these old lines still carry a lot of weight. Now the problem, of course, you run into is having, you know, way too many lines on your chart, and it's just something that when you're trying to set up these lines so that you don't end up with line, just horizontal lines everywhere, you go back and you look for the number of times that price tagged that line. So here I've got one. Well, I've got 1, 2, 3, 4, 5, 6, that's one grouping, 7, 8, 9, 10. So, you know, you can see it's been tagged 10 times. That's a good line. That's a really good line. But if you mark what you think is a support and resistance line and you look left and you just don't see that it's tagged it a lot, that's not to say that it won't work and have value to it. It just doesn't have as much strength and importance as a line. Remember, you only need 2 points to make a line, but 2 points makes a very weak line. It is the number of times that it continues to get tagged that we start to see that how well respected it is. Okay, so there's horizontal and vertical, or I keep saying vertical. There's horizontal support and resistance. And as you can see, even on the daily charts, you'll find it happens on the 15, the 30s, and so on and so on. And if anybody's got any questions, just jump in, either posting a question in the chat or on voice. Now, we talk about these lines horizontal, but they can also be diagonal. So let's take a look here, and I'm going to come to this. Why this point here? This point is a significant low. See how we're moving around in here? We came down, we set a significant low, and then we took out this high. So I like this low. Now what I'm interested in doing, oops, that's not what I meant to do. What I'm curious, and sometimes you just have to try, it's trial and error. So I'm going to mark that, and then I'm going to mark here. So now I have a diagonal. Now if you're listening to Jeremy, he calls that angular resistance. Same thing, diagonal or trend line, a trend line. So a trend line and angular resistance, same thing. Now, do we excuse me? Do we have a pattern here? Let's get rid of these horizontals. Go away. Come on. There. What do we see here? We see this point, these points. As a matter of fact, let's move it right here, a little bit tighter, okay? A little bit tighter. What do we see happens here? Here's point 1. Here's a small little pullback. What do we see? Right there, okay? Walking the line. It comes down. It knows that that angle is there. That trend line is there. Let's see what happens afterwards. It goes up. Now, this by itself is not, we're not getting anything stellar out of this. Let me look over to the right. Yeah, no. Okay. However, one thing that's really fascinating that you can do about trend lines is this. I'm going to copy and paste another copy of this line. I'm going to set it. I'm fishing. Setting it up here. The same degree of a trend line in a parallel channel can give you a channel. Look at right here. You see that? You see we did break it. We came back in to about the midpoint of those. We went back up to it again. We came back down. Notice how it stalled right here. Violent break down. This violent break tells us trend change. Time to change the trend. We come down. We come back up towards the line. A lot of times you'll see it actually come up and touch that line, and we would call that a break, retest, bounce. Now, Signet calls that a Busby or trend line breakover. So you have the break. Here's your retest to see can we get back inside that channel, and the answer is no. And fine, we accept the new direction. Now, we don't have a lot to go with here on this chart. Let's go to a lower time frame. I'm going to remove all these drawings. I'm going to go to a 15. And I'm going to go back several days so that we've got some of these trend lines to follow for a bit. Okay. And this is a matter of, do I see a trend line here? Let me see, maybe. Here to here. Real close. Does it matter later on? Well, looky there. Remember I talked about that violent break? Here's your break. Now this retest actually came back across the line and then took off. But again, that trend line is still working days later. I'm on a 15-minute chart here, 15-minute candle, and this trend line I established, let's see, December 30th. And does it make any difference going back into the past? Look at that. Look at that. I'm going backwards in time. Look at that. Backwards in time. There it is. 26. So that was 4 days earlier. Then on the 30th we mark it. And then here we are. January 3rd, walking that same trend line. Okay? So whether it's flat horizontal or whether it's diagonal, diagonal we call it a trend line. If it's completely horizontal, we just simply call it support and resistance. Same concept. The algos and retail traders like us map this stuff out. We know it is there. So you can see that this is still here. Look at this. Right there. Right here. Tiny little. Right there. You see it? Came down to it. Here. Okay. Now, we talked about that duplicate line idea earlier. So now, generally speaking, when I mark these up, I'm going to make this the solid line. Okay, that is the reference line. Everything references to that. Now I'm going to do that derived trend line. And I'm going to look for a place where it makes sense. Now I've got a high here, I've got a reaction to it here and here. We see that violent break that was rejected here. Now this is a derived trend line unless I can go back in the past and find, well, here, here, and here. So that's a strong trend line also. I'm going to actually leave it alone. If I come back and I find that the parallel channel seems to work, but it's real choppity, all it just kind of reacts to it, but doesn't ping, hit it in reverse, ping, hit it in reverse, whether from up and down, then I would change it to a diagonal or a dotted line to show that it's an area. But looky here. So here we are. We're looking at Ethereum on the 15-minute. I just picked this chart because, and what do I see happening here? I have a strong suspicion that when Ethereum tags this line, it's going to do something violent. Now, it may bounce. It's possible. But it also may simply come back into this channel. As we see what happened over here. It went up, it broke out, it hit this, tested it. Notice this. Let's zoom in on that. See, it breaks it with violence, comes back in. These little queen candles right here are trying to get back over it again. They're trying to get over it, but it's just not there, and it falls off. Okay? So that's testing that line. So it broke, retested, bounced. Here, we broke, retested, but, you say, well, that's not really the same kind of bounce as we saw over here. This was simply, they took liquidity. Notice that. Let's see if we can get that. These people went short. What do we see happening here? Follow the horizontal diagonal line. I'm at the top of this wick, and if you look to the left over here, follow my cursor, and you'll see that they took it out, because here was where, all the stops were down in here, for the people that were going short. So all those stops were here. They ran the liquidity, triggered their stops, go the other way, make some move, ran out of steam. All these people got back into this trade, and off it went. Now we see, though, we're coming back in on the 15-minute chart. What do we see? You see these little grouping of candles right here? Well, there's probably a bunch of stops right in here, probably on the other side of this line. So we expect to see this candle come in, grab these stops. Now, depending on the violence of the candle. Now, when I say violence, I'm talking about the size of it. These are wimpies. This here is your big, you've heard me joke about the big-ass candle. This is a candle that dwarfs the size of these others. Here is a good one. Here is a good one. These are candles that are 2, 3, 4 times the size of the other candles. And so when we get to this trend line, I'm expecting to see some kind of a reaction. I don't know what that reaction would be, but let's say that I was short Ethereum here. If I'm short Ethereum, I can guarantee you that I will probably be looking to get out of this trade near this line. It may continue and go all the way down here, but because I know there's going to be some type of reaction here, and I don't know what kind of reaction it is, I will probably get out of this trade if I was short Ethereum. Now, by the same token, let's say that I was long Ethereum down here. I would have probably gotten out here. Let's say I kept a runner. What's a runner? Well, let's say that you went 3 contracts. 3 contracts. Well, I would take one out here. 2 of them out here, because that is my spot. Then I've got one left over, and we'll call that the runner, who is down here at break even. And if I get stopped out at break even, okay, I don't expect the runner to be profitable. That's my home run hit if it should happen. And right up here, we start to see that home run, if I'd gotten out 2 here, left that 3rd contract sitting at break even somewhere down here, you can see we pulled back. You're like, I should take it. No, that's not the point of the runner. The point of the runner is to sit just above break even, factor in the cost of your commissions and all that, and just sit there and wait it out and see what happens. And either the runner gets stopped out for complete break even, or we get that home run. Now, we'll talk about measuring how far that home run should have gone. I'll go ahead and show you. Not going to get into much of it right now, because that's not the point of this talk tonight. But we've got a low here. I've got a high Fibonacci here. And I would have probably gotten out of that contract at a 50% measured move. We can see it actually went more, but at least that 50%. The minute it crossed that, I would have probably rushed my home run, my runner stop up somewhere up in here at that point, because we've moved, that kind of thing there. But I'm not getting into measured moves so much. I just wanted to kind of show that very quickly. All right. Trend lines Do they work on multiple time frames? Absolutely. Let's go to the 1 hour. Now remember, I was on the 15. Here we are. Days ago. There it is. There's that trend line. Y'all can't see that. There, look at that. Bang, bang. There, walking it. Interacting with it here. So do I think that trend line has got some, some significance? Absolutely. Absolutely. Okay, we were talking about, we didn't know what Ethereum was going to do on that trend line. Let me go back. I was on the 15. Let me see, did that hold true? Huh, now that's interesting. That's very interesting. What I'm noticing here, there's a problem here with Ethereum, or at least with this chart. This price is below that trend line. Y'all see that? But if I go to the 15-minute, it is just now breaking that trend line. So that is one of the problems that a lot of times you can have with platforms. This is TradingView. It's supposed to be the best of the best of the best, right? And there you can see it didn't map the trend line properly. It happens. It happens. I'm a little disappointed in that. I didn't expect that to happen because normally TradingView is pretty much spot on. Anyway, is what it is. All right. Now, so trend lines, like we say, have significance to them. And again, you say, well, how many trend lines? Well, it all depends on how many touch points you've got in the past. When you take a trend line, we're going to go back and we'll look in the past and we see here, well, we don't know about this one yet. Here it interacted with it. Here it interacted. 3, 4, 5 times it did something at that line. 6, and so on. So, it knows that the algorithms know that trend line is there. And so they are, whatever. And remember, this was the derived one. This was the original one we marked. Then we simply copied this trend line and moved it up here looking for a place. And so we see these kind of things happen all the time. Happens all the time. So just kind of keep that in mind. Oh, let's see. So there's traditional horizontal and resistance. There's trend lines. Now we're going to move into like I said, pop in with any questions or anything like that that you got. Now we're going to talk about fan lines. Fan lines are one of the most confusing things to people. I'm going to try and make this. Fan lines were made popular by Jeremy. Jeremy discovered, I don't know, he didn't discover it per se. Obviously, the algos knew about it. But what it is we're taking this idea of trend lines and we're cutting them into halves and quarters. Now, let me explain what I mean by that. Now, I put these yellow lines on here just to kind of show me, because I'd already looked at the charts and to find stuff. So here we are. Let's start with this trend line. I have a trend line right here to here. You can see that this trend line carries weight to it right here. Now, I'm on the 1 minute. Doesn't matter. Trading is fractal. I'm going to draw another trend line right here to here. We're going to go back in time to see how well this trend line. We can definitely see a lot of interaction with it. Here, here, maybe more. No, okay. Certainly, though, we can see that I think we can agree that this is a trend line. Look at that right there. Right there. Walking it. So, okay, we have two trend lines. All right. Step one, I have marked the two trend lines, a bullish one and a bearish one. Step two, I'm going to put a vertical line in on the lowest low of my bear, which is this mark here, and the highest high of my bull. Okay, I marked here to here. That is my highest high. And then I marked from my lowest lows here to here. All right. So I've got my highest high in the bull, my lowest low in the bear. All right, that's step two. Step three, I am going to draw a Fibonacci or a measured move or whatever you want to call it from the highest high line to the lowest low. Where are you? There you are. There. Now, I'm not so much interested in Fibonacci's. As a matter of fact, I'm going to go into this and I'm going to turn off all the Fibonacci's. What I'm interested in is quarters and halves. Okay, now what else do I need here? I need a, we'll start with that. I'll come back and change it if I need to. There's step three. Now, I'm going to start drawing in. We'll compress this a little bit. Everything will be done on this rightmost line. Everything. We're going to go from the vertex to the most. So we're going from outside to outside. So I'm going to come to this vertex. I'm going to draw a line. And I'm going to move this to the right to that 1.5. There. See that 1.5? Again, from the vertex to the interior 1.5. There. I'm also going to do the quarters. So here's the 75. Here. There's a lot of lines, I know. That's why I say this is confusing to a lot of people. Here's the 25%. I'm going to stop there for the moment. Okay. Remember, this is the last mark that I made. So all these lines afterwards are projections from my initial broadening formation. What is a broadening formation? It means I had a this line right here. Let me mark that. No, that's not the right line. It was this line. Let me do something here, style, like that. That's the first line. And then the other line was this one, I think. Yep. And we'll make you as fat as you'll go as well. Matter of fact, let me change the colors. It'll be easier to see. Instead of yellow, we'll go with gray. Nah, blue. Oops. No, no. This one. And blue. Okay. Here's the original line. Here's the original line. I can get rid of the Fibonacci now. I'm done. Unless I want to continue. You know what? Let me go ahead and mark this 50% lower. I don't know. Let me see if the price. No, it doesn't matter. So we'll get rid of the Fibonacci. We're done with the Fibonacci. So here was my original line bullish, my original line bearish. This is what we call a broadening formation, also known as a megaphone. Same thing. I don't need those anymore. Okay. Now, then I divided this around, different places. Let's see what happens. Notice these trend lines, these are computed trend lines. There. 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 Here's our original trend line. There. Yellows are computed ones. Here. Don't know if you can see that. No, you can't see. See that? Came down to it. Bounced. Tiny little bounce right there. And then it moved on through it. What else? Look at that. Look at that. We're at today. We're actually at the 1 minute. We're in the 1 minute. Here's market open right back here. And we have gone to a trend line that started when was all this drawn? January the 5th. This can't be January the 5th. Monday, January the 5th. Oh, it was yeah. Okay, it was today. Yeah, that's the 1 minute chart. So this started today. Go back in the past. Remember what I said about going back in the past and looking at trend lines. There, 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 there. Violent break here. Tagged it here. Look at there. Look at there. Now, oh, wow, look at that. That's one of our reference lines. There. How far back we can go. Look at that. Look at that. Ain't that amazing? Amazing. Absolutely. Now, of course, this gap has gotten so wide. You could subdivide this. Absolutely, you could subdivide this if you really wanted to even further. So I did probably, I don't know if that was a 25% or 50% or whatever, but you could get down into the 12.5% and whatever else. But y'all would agree that maybe it's somewhere around, let's just kind of put these two trend lines here to here, which would put it right about here, be about the middle of those two trend lines. And there you go, right there. Okay. Okay. Now, the question is, well, what do you do with them? Well, generally speaking, we expect some type of reaction. Let's go back to the 30-minute chart. We were on the 1-minute chart. Okay. Now, if you recall, I did not mark out the lower half of the lines. I only did the upper lines between the broadening. Here's the bearish trend. If I'd have marked these down here, anybody want to place a bet on whether it would have touched one of these back here maybe? Very possible. So what do the fan lines tell us? Do they tell us that what they are? They're targets. They're targets. They're not necessarily entry points. They're targets. Let's go back to the 1 minute and no, I'm not going to do that now anyway. I could continue to draw more of these fan lines going down this way. But y'all get the idea. They are targets. Now, understand, fan lines are not necessarily, you can trade on a fan line if you thought. Here's the thing though. The thing to understand, this is a blessing and a curse. Let's say when you saw this coming down, you wanted to go long on this candle. Let's just zoom in on that. Let's say you wanted to go long right here. So it touched the candle and you went long, or the line rather, and you went long. The problem is your stop is way down here, unless you've got some other reason on the chart to have a stop in another place. Actually, I would put the stop right under this tiny little candle right there. But the point is, a lot of times they're not that great for trading as far as an entry, but they are fantastic for targets and exits because you know something's going to happen there. All right, so it's important to understand that fan lines are not necessarily a trading strategy, but it is a line of activity. You know something's going to happen there. Okay? And that is the important thing to understand, is that something is going to happen there. Excuse me one sec. All right. So, now, support and resistance can be a trading strategy, but fan lines should not be a trading strategy. It's simply telling you where price can go. All right? All right, so that wraps up here all the support and resistance lines, and a little bit of discussion about liquidity and running stops. And so, believe it or not, I'm actually going to have a session that's going to be less than an hour. Anyway, I hope that helps some folks there. If this is a chance, if anybody's got any questions or comments at this point, I'll leave that whether in chat or on mic. You're welcome to jump in at this point. Let's see. It's too tight. Just curious if I see a smaller trend. And there can be trends within trends. Hope you caught that idea. Come here. Come here. Get up there. Trying to move by sub-millimeters, seems like. There. Copy, paste. Doesn't make sense anywhere. All right, that kind of makes sense, but it's not a really clean one, so it's more of an area. Although, I don't know, 1, 2, 3 ticks, or 3 touches there. So can you have a trend within a trend? Multiple trend line? You can. Obviously, you can. The problem is you start to get looking like this. Really busy. So this is where you want to color code, use solid versus dashed lines, or different things like that to try and keep your life organized. But you can definitely get really crazy looking, and I'm just kind of curious. Let's go to the hourly chart. See if that trend. Oh no, that didn't touch anything. Okay, well, never mind. All right, just curious, fooling around. All right, folks. On that note, I'm going to wrap this up. I hope this gave y'all some help and some ideas about things. As you can see, your charts can get really cluttered really fast. So you need to have a system, whether they be colors. Maybe some color is a daily trend line, and then another color for an hourly or something like that. And remember, too, you don't have to draw these lines don't have to go. If I come back down in here into the 5-minute, reset this chart, I can always go back over to, style, extend, turn that off. Same thing here, turn that off. And now I've got just a little small time channel going on here. Just a little small time channel. And then I'd have to, of course, but I want you to notice also this trend line is getting ready to intersect this trend line. Wait a minute. What does that mean? Well, if they're both strong trend lines, now one's done on a higher time frame, and actually these were done on the 1 minute. These were done on the 1 minute as well, or the 5-minute. But what? This bottom one's not very strong necessarily, because it's kind of been more of an area, though we do seem to be tagging it to the tick down here. At any rate, the point being is that when trend lines intersect like this, it's very possible that you can see a violent move come out of it. And you say, well, why? Well, because some people are watching one trend line, some people are watching a different trend line, and the algos may be watching them both. Who knows? We don't know. But the point being is that an intersection of a trend line like this can just lead to incredible total chaos. And so, I mean, all that is very, very, very possible. At any rate. So if you're interested, that's the ES on the 5-minute. We can certainly come down to the 1 minute and watch it. And if you're interested in watching this after the, you can certainly watch it there. But notice that right there. Let me see that. Those two. It essentially bounced off both trend lines. Isn't that cool? All right. All right. I'm going to wrap it up from there. Be interesting to watch and see what happens as this goes in. What is this area right here? This is called a pennant. We have lower highs and higher lows going into this compression area. And what happens when we get into compression? Explosions. Now, we don't know. It could happen here at 8 o'clock tonight. It could happen over here at 9 o'clock tonight. We don't know what will happen, but there's a very good chance that as price compresses between these two trend lines, that as somewhere in here, that it will just go boom, maybe all the way to the upside, maybe all the way to the downside. We don't know, but definitely pay attention to the fact that we've got this pattern right there called a pennant. Speculation. Let's see. We ran a low here. We've got a lower high here. We took liquidity. We ran out. We have not set a higher high yet. We're starting. So really, this is your box right here. I can't draw worth crap, but let's try that again. I'm just going to put this on here for the moment. There's a part of the box. That's the high that it's got to break to get out of the box. This is the low it's got to break to get out of the box. You can see it did stick a toe out right there and went back inside the box. So it's not ready to go outside that box yet. At any rate, but to get a move on, it's got to get out of above this or below this with a close, not just a toe, a good close. It did have a little tiny close here, so I might actually move this line down. To that new to that new low right there. Okay. There's my box. Here to here. All right. Folks, I hope you got something out of it there, and I'm going to wrap it up here. This is an ongoing series. I will upload this and post links for the replay and whatever else. If you have any questions about anything, you're more than welcome to send me a message. I am with the Bullish Bears group. This is a public video so that you can find more out about us at thebullishbears.com. We have a very active website, or Discord, I should say, very active Discord, and we enjoy teaching people how to trade. So with that, this is Marzidi signing off. Be good, or at least be good at it. Bye-bye.